All right. So good morning, good afternoon, good evening, depends on where you are connected. I believe you guys can hear my voice very clearly. My name is Emmanuel Adigbola, aka the Forex Apostle, and today we will be demystifying the futures market, futures trading, uh, due to the popular demand. So instead of attending to individual one after another, so I just decide, okay, why don't we just do this training together? And that is exactly what we are going to be doing for the next 1 hour. If we can't finish wherever we stop, we will continue from there. Actually, I didn't really have time to prepare any PowerPoint slide. So what I did was just put down my thoughts on the paper for you, and you guys, you will get access to the document also after. So in order not to waste our time, I'm just going to get started immediately. So I believe you can see my screen. If you can see my screen, please type 1 on the chat window. If you can see my screen very clearly, type 1 on the chat window. I'm just going to follow this guide and we'll take it there. I will be going through the PDF. Then if I have to switch to the chart, I will go to the chart and so on and so forth. But I think with that, we will be able to cover a lot. Okay, awesome, awesome. So I titled this The Beginner's Guide to Mastering Futures Trading. The Beginner's Guide to Mastering Futures Trading. And once again, my name is Emmanuel Adigbola. Risk disclaimer, please understand that this training is for educational purpose only. It is not to entice anybody to join the futures market. Understand that trading any commodity, any instrument, or any market involves risk. And of course, according to the CFTC, please do not invest or trade with the money you cannot afford to lose. Okay, I hope that is covered. It is necessary for us to do that. And once again, what we are going to be covering in this training, okay, I put all of this together to guide us. And as I said, if you need more materials, you need more education on this, you can research them. But I want to believe that everything that I've put together is good enough to get you guys started. So we're going to be looking into introductions to futures trading. What is futures trading? History of futures market, how futures trading works, benefits and risk of futures trading. We'll also look into understanding futures contracts, definition and structure of futures contracts, key terms and concepts, types of futures contracts, how futures contracts are settled, the futures market participants, speculators versus the hedgers, role of brokers and exchanges, understanding the market makers and market takers. 4, we'll be looking into the futures trading platforms and tools that you need. Overview of the different trading platforms that are available for you. We'll look into essential tools for futures traders, how to choose the right platform, setting up your trading account. We'll look into fundamental analysis for futures and trading, introduction to fundamental analysis, key economic indicators. We'll look into how to analyze the market and how to use the fundamental analysis to aid your trading. We'll also look into technical analysis, some basic technical patterns and indicators that you might need or that I am using. We'll look into risk management in futures trading, importance of risk management, how to set your stop loss orders, and so on and so forth. Then, of course, we'll take a look into 1 or 2 trading strategies, because when it comes to trading, there are 3 types of market, which I believe you know. It's either the market is trending up, the market is trending down, or the market is ranging. Then we also have 3 types of trading systems that you can trade. So the first one is a trend following strategy in which you trade with the trend. That is where you say, oh, okay, the trend is your friend. Then sometimes the market is ranging. There are different systems that you have to use. And sometimes also the breakout, the system also has to be different. There's a reason why when you go to the mechanic shops, that they have different tools. They don't just use one spanner for all their work. They have different spanners, different screwdriver sizes for different tasks. So the same thing in trading. So one of the reasons why people fail in trading is we use one system for everything. We use one system for every type of the market, and it doesn't work like that. Take it from someone that has made a lot from the Forex market, and of course, that has also lost a lot. So anything I'm telling you right now, just take it that, okay, this is a gift for you, okay? So we'll be looking into how you can develop your own trading strategies, because what works for A might not work for B. So we'll look into that. Then how to build your own trading plan. We'll look into that if time permits us, because my goal is for us to spend 1 hour together. As I said, if we didn't finish today, we'll continue from wherever we stop. I will look into psychology of trading, which this, of course, is a continuous learning when it comes to psychology. You cannot explore it all in one day. In fact, we can spend the whole 1 hour talking about the psychology of trading, because that is what is responsible for 70% of our success in trading. Understanding trading psychology, common psychological challenges, techniques for maintaining discipline, building confidence and resilience. Now, you see, why majority, either in Forex, in cryptos, or stocks market, or any type of trading, why majority fail, why majority lose money, is lack of discipline. I have, trust me, guys, I have made a lot of money when it comes to this market, talking about Forex futures. And of course, I have lost a lot of money. Now, when I do my tracking, when I look into my trades, where I have suffered major losses is due to lack of discipline. So get it from me when I said techniques for maintaining discipline. I mean, this alone, we can spend a whole 1 hour on it. Okay, and how to build your confidence and resilience, we'll look into that. Of course, we'll take a look into some case study. I hope the time permits. As you can see, there is just a lot to cover. I hope you guys are ready. I hope you guys are ready. So if you are ready, type "I am ready" on the chat window. Come on, guys. Type "I am ready." Come on, give me some energy. I need that energy to rock this training with us this morning. Once again, as I've said, instead of attending to us one after another, answering questions one after another, that is why I have decided to, have this group training. And remember, I'm a Forex apostle. I'm not futures apostle, but the little I know, I will share with you. So let's get started. All right. So talking about futures trading, please try to move around with me. As I said, we're going to be spending 1 hour, and as you can see, we have a lot to cover. So talking about futures trading, what is futures trading? Futures trading involves buying and selling futures contracts, which are agreements to buy or sell an asset at a predetermined price on a specified future date. Now, underline this word, future date, because it is not present, okay? It is not present. That is where the word comes from, futures trading. So let's say, for instance, you want to buy gold, raw gold, okay? This is raw gold. And this gold, I say, okay, you know what? There must be two types of people, right? There must be a buyer and there must be a seller. So the buyer brings the gold and say, okay, this gold, I'm going to give it to you. Let's say just 1 carat, okay? Just whatever. Now, and give you this gold and say, okay, let's agree. It doesn't matter the value of this gold in the next 1 month, okay? The next 1 month, you are going to be paying me so amount of money, maybe like $5,000. And the buyer sign, the seller also sign. So two of you, you have that agreement. This is where we talk about futures market in physical term, okay? So after 1 month, this contract will expire, okay? That will be the expiration of this contract. So it doesn't matter if the value of the stock, of the gold has gone down or up, you are still paying these buyers this $5,000. So basically that is what it is. So if you are coming from Forex market, you will understand, because we're not going to be diving into the theory that much. I believe what concerns you more is show me the money apostle. How can I trade this? So just like Forex, you have a euro, you have USD. Then you exchange euro for USD. Or okay, if you see that euro is going to go up, you will buy euro, right? You will sell USD. So that is when you say, okay, this market is going up, is going bullish. The same analogy, the same thing you will still use in futures market, because if you are going to be buying a commodity, you should be able to see the value in it. Okay, this thing is going to be more valuable for me. It doesn't matter, guys, where you are coming from, either from cryptos, from futures, from stocks or whatever. You need to understand this concept. You buy low, you sell high. It's still applicable everywhere. So always look to buy whatever you want to buy at a low price so that you can sell it at a higher price, or you can buy it at a higher or at a high price. Okay, you can buy stuff at a high price, okay, and sell it at a higher price. So there is nothing like overbought or oversold. You can buy something at a high price and sell it at a higher price. The same thing here. So if you are, once again, you are coming from future, you are coming from Forex, crypto, stocks, the same analogy, the same thing you'll be doing, you can still do it over here. Okay. So history of futures market. Once again, I'm going to be skipping a lot. I will give you this document after the training, and you can read through. So just like when we talk about a Forex market, there is a history how Forex market starts. And the same thing also is futures. So futures trading dates back to ancient times, but modern futures market began in the 19th century with the establishment of organized exchanges like the Chicago Board of Trade, that is CBOT, was one of the first exchanges to standardize futures contracts. So once again, if you want to read too much about it, please go online, go and read about it. That's the few introduction about how futures market started, how futures trading works. Futures trading allows traders to speculate. I have explained this already on the price movement of underlying assets. Okay, that underlying asset might be gold, might be whatever, any commodity at all. Traders can take long, that is buy, or short, that is sell. I believe you are familiar with that. Positions, aiming to profit from price changes. The reason why you are buying is because you are speculating that the price will go up. The reason why you are selling is because you speculate that the price will go down. Futures contracts are standardized and traded on exchanges, providing liquidity and transparency. So if you have traded futures before or you have been playing with it, you will know that it is more regulated than Forex. Forex market is not regulated at all. There are some regulated brokers, very few of them, but futures market is not like Forex. And that is why it looks like it's a little bit expensive for you to dive in. Yes, it might look like it's a low entry thing, but there are little subscriptions that you have to have for you to be able to trade futures. So benefits and risks of futures trading. Number one is leverage. If you have, for instance, some of us now we're trading with prop firms, you buy an account for $30 and you are controlling account size of almost $50,000. That means that is leverage right there. But that doesn't mean that this whole 50,000 is for you. But you are able to purchase this account with this little amount. So that is leverage. That is leverage right there. If you are trading your own personal money, if you put $1,000 and you have leverage of 1-to-1, you're only trading with 1,000. But imagine if you have leverage of 1-to-50, okay? You are trading with 50,000. So that is what that means. Once again, coming from Forex, you should understand these terminologies very well. You should know that leverage is what? Two-edged sword. It can make you or it can break you. It can make you, it can kill you. So you have to understand how to use leverage very well. Then liquidity. Of course, everybody is a liquidity to the market. Everybody. Without liquidity, there's no market. Without volatility, there's no liquidity. Right now, if you look at the market, it's like the market is sleeping right now because there's no more liquidity, there's no more volatility in the market. The liquid means moving. Somebody must be buying, another person must be selling. Remember the word market. Market is a marketplace. So there must be two groups of people, somebody willing to buy, another person willing to sell. That's what makes the transaction go through. Also understand that any action you are taking, if you are buying, okay, somebody is somewhere selling. Just get that. If you win, you make money, it means the person that sold lost money. If you are selling, somebody is somewhere buying. If you make money, it means somebody that sold somewhere lost. You don't have to know the person. You don't have to know the location of the person, but just know that it's a marketplace, just like Forex, just like cryptos, just like there are some cryptocurrencies that you have right now that if you go to some exchanges to sell it, nobody is ready to buy. True or false? I want to be sure that you guys are following me. True or false? Type your answer on the chat window. There are some cryptos right now. I have a bunch of them that nobody is ready to buy. True or false? True or false? Absolutely. So if you have some cryptos and there's no buyer, that cryptos is just going to be lying there in your wallet, you know. So the same thing, this is a market. If you want to buy, somebody must be willing to sell. If you want to sell, somebody must be willing to buy. That is why when it comes to cryptos, permit me to be using cryptos because that will kind of resonate with more of you. If I want to buy Bitcoin now, somebody must be willing to sell Bitcoin for me somewhere. Okay, the same thing, if I want to buy gold, okay, contract, somebody must be willing to sell gold contract based on that contract date, which we are going to be looking into. Okay, guys, I'm going to be increasing my speed once again. The plan is for us to spend 1 hour together today. And I hope I'm making sense to us. Wherever we stop, we'll continue there, hopefully by His grace, tomorrow. Tomorrow is Saturday. We can do something tomorrow morning. Okay. So understanding futures contracts. Definition and structures of future contract. Future contract is legally binding. Okay, look at that word, contract. Okay, look at that word, contract. And look at this word, legal. And look at this one, binding. And look at this one, agreement. That's all you need to. Okay, it's a contract. Okay, legally binding agreement. Okay, to buy or sell an asset at a future date. I have explained that. Or for a specified price. Key components include the contract size, expiration date, and delivery terms. There must be contract size, expiration date, delivery terms. I have just to kind of portray that. Let me quickly show you guys. If I go to, let me see, can you see my screen? Okay, can you see my screen, right? You guys can see my screen. So take a look at this. Do you see that? This is E-mini. This is NASDAQ mini contract. This is what? September 2024. That is the contract that we are trading right now, if you are trading NASDAQ. So, and the body regulating this that you're getting your data from is what? The CME. So you see, it is totally different to Forex. This one has, you know, like, okay, the contract, the date is attached. Okay, if I go, this, I believe this is micro. If I come here, this is US, this is Dow Jones, okay? You can see Dow Jones. We will not look into the amount, the value right now, because when we're talking about features, you'll be looking into the each contract size. How much is that contract size, and so on and so forth. If you go to, let's say, NASDAQ, let me see, give me a minute. If you come over here, let me go to Apex. If you scroll down, you will see some right here. If you scroll down, I'm just using Apex. I'm not asking you to sign up for anything yet, but I'm just trying to explain something. Now, if you come here, you see instruments you can trade on. This is Rhythmic or Ninja Trader. You will see instruments you can trade on Tradovate, because this prop firm has two types of accounts that you can get. It's either you get Apex, it's either you get Tradovate or you get Rhythmic. So you can see the instrument you can trade. This is the equity, equity instrument. You can see many S&P, nickel, blah, blah. So most of the time we trade NASDAQ. I mean, almost everybody that I know trade NASDAQ. If you are in the UK, you can be trading something else. So you can see the tick size of NASDAQ is a quarter. That is 0.25. The point value is 20. So it adds up real quick. So let's say, okay, you put a trade that, okay, this is going to go up, and you are able to, in Forex, you say you make pips, right? You make 20 pips. So over here, let's say you make 100 points, which is a lot of 100 points. 100 points. So that would be 100 times this 12. So that is, it therefore means that you have made $2,000 in that trade if you trade one mini contract size. So imagine if you trade 10. So that would be times 10 of this. That would be 20,000. So that is what to make. Also, let's rewind a little bit. If you make, remember, you can also lose. So if this trade goes against you, if you trade one contract size, you lost $2,000. If you trade 10 contract size, you lost $20,000. It's as cool as that. So this is NASDAQ. You might want to trade, you want to trade gold. This is gold right here. You see metal instrument, you see gold. So point value is $100. Tick value is 0.1, okay? So you can see. So then you also see the symbol. We're going to go into all of this. The symbol for gold, as you can see, is GC. The symbol for NASDAQ, as you can see, is NQ. If you go to micro instrument, then Talking about micro good now, it would be MGC. Talking about a micro mini Nasdaq, you'll be talking about MNQ. So all of this, you don't have to memorize anything. When I got started also, I was just, navigating my way. Sometimes I would call my body BJ. Okay, sometimes, up to now, we are still learning. So once again, I'm not the Forex apostle. I'm not futures apostle, I'm Forex apostle. But I believe everything you are learning, you can apply it also in your Forex if you are still trading Forex. So then the exchanges where you are getting your data from is, you can see right here. This is CME. We talk about Chicago. This is CBOT. So all of this. So when you are signing up, you are subscribing for this data. Like for instance, right now I'm using TradingView. You will subscribe for TradingView. And if you are using, let's say, NinjaTrader, you will subscribe over there, and so on and so forth. So I hope this makes sense. If this is making sense to you, please type yes on the chat window, because I want to be sure that I'm giving out value and I'm not just talking to myself. Type yes on that chat window if this is making sense to you. Come on, guys. Type yes, 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 if this is making sense to you. Awesome, awesome, awesome. Okay, cool. So key terms and concepts. We talk about contract size. I've just discussed that. The quantity of the underlying asset, the margin, the amount of money required to open and maintain a futures position. If you are a Forex trader, all of these terminologies, you should be able to, quickly grasp it. If it is Forex, you'll be talking about, instead of a contract size, we'll be talking about lot size, right? You're talking about lot size. Here, if it is Forex, this will be lot size. In Forex, you can trade 0.01, 0.25 lot size, and so on of instrument you are trading. Over here in futures is 1, 2, 3, 4, and so on and so forth. Except if you change, let's say for instance, mind you, I'm using Nasdaq as example, okay? Nasdaq. So if you are trading one mini contract size, as we have said, the value will be what? $20. But if you are trading one, if it is a micro, then one micro, this is mini, sorry. One micro will be this one divided by 10. So that is $2. Okay. So if you, let's say, for instance, you have an account of, let's say, $100,000, you might be trading one mini contract size. Somebody that have account of $10,000 might be trading one micro. So I hope this is making sense to us. So that is just all about that you need to understand. We've talked about leverage. Leverage simply means that you borrow money. It is not your money. You borrow it. If it works for you, good. You enjoy. If it works against you, then you suffer the loss. So using borrowed funds to increase the potential return of an investment, that is simple definition of our leverage. Okay, types of futures contract. Okay, we have commodity futures and we have financial futures. This is the one we deal with. Okay, this is the one we deal with. This one is, let me call it offline. Offline contracts. So let's say you have a physical goods like gold, like oil. At the expiration of that contract, okay, the physical goods will be mailed to you or will be shipped to you. Okay, will be mailed or will be shipped to you, because it's a what? Is a physical good. We are not dealing with this, okay? But this is the one we are dealing with, the financial features. That's the one we deal with. So contract based on financial instruments like stocks, indices, currencies, and interest rate. So like in futures, you cannot trade Euro USD. You cannot trade Euro USD, but you can trade Euro, okay? Because this is what? This is a currency of in a country. You can trade USD, okay? But you cannot trade Euro USD. Does that make sense now? So if you are a Forex trader and you are trading Euro USD, okay? So if you do your analysis and you discover that Euro USD is going to be going up, it means that it is Euro that is going up and USD is going down. So in futures, what can you do? What can you do? Let me see if I have some of you following me. In Forex, you do your analysis and you say, okay, I'm going to be buying Euro USD. But in futures, you cannot trade Euro USD. So what do you do instead? Let me see. You can just type your response. Type your response. What will you do? What will you do? Remember, you cannot trade Euro USD. Okay, somebody said, oh, buy Euro. Yes. Yes. So you can buy Euro or you will sell USD, a USD index. So you can buy Euro. So what you just do is that you will trade Euro. Okay. And because you don't have a Euro USD. So now this is making sense to us. Okay. Let's increase our speed. How futures contracts are settled. Futures contract can be settled in two ways. Physical delivery, I just explained that. Underlying asset or cash settlement. So the first one is what? Physical delivery. The one we deal with is the cash settlement. So once my trade goes through, it's cash, not physical goods. Where the difference between the contract price and the market price is paid. So I've just explained that. Okay, now we are in chapter 3. The futures market participants. If you are used to Forex, once again, you should understand this. There are speculators and there are what? Hedgers. So you and I, we are speculators. You just speculate the price. Oh, okay, it's going to go up. Oh, okay, it's going to go down. And that is what we do. So the speculators are the traders who aim to profit from price changes. And that is what we do. If I come over here now and I said, okay, you know what? This is NASDAQ. This is NASDAQ. And I go, let's say, okay, on 5 minutes, and I look, if you traded this morning, either futures or Forex, you must have seen the market move. You know, in Forex, this move from here to here might be just like 20 pips. But in futures, that is a lot. That is a lot. If I come over here now and I pick this instrument, let's just assume that I measure from here over there. Look at that. Look at that. Look at that. That is 626. This is 578. Okay, ticks right there. Imagine if you take it down like this, where the market is. This is over 1,200. Okay, guys, that's over 1,002. So you can see just small move like this, you make a lot. Depends on, I mean, that is just, you are just dealing with just one. Imagine if it's now 2 contract size of that particular instrument that you are trading. So we are speculators. We are looking, okay, you know what? This market is going to move in my favor. I'm going to be buying. Oh, it's going to go down. I'm going to be selling. That is exactly what we do. The system doesn't really matter. But right now, just understand the concept. If I sell here, okay, so let's say, okay, I put my sell or I put my sell here, and you see right there, just this small move right there. You see, just this small move right there. That is 480 ticks right there. I mean, that is a lot. That is a lot right there. So you need to understand all of these as we go, and just know that you profit. You are a speculator. You are not a hedger. Okay. Role of brokers and exchanges. Once again, In Forex, you have a Forex broker in the middle. You have Forex broker in the middle, and you, as a Forex trader, you sign, and it's the Forex broker that will provide you your charting platform and so on and so forth. But there are a lot of manipulations in Forex industry, a lot. A broker can trade against you. A trader can tweak the chart against you, and so on and so forth. But in futures, it's not common. Not that maybe it cannot be done, but it's not common. If there's going to be any manipulation, that manipulation is coming from the market makers, not really the broker per se. So brokers facilitate trade for clients and provide access to futures market. Exchanges such as CME Group provide a platform for trading futures contract, and ensure market integrity. You see, that word right there, that is why that word, integrity, that is why most Forex brokers have issue with a country like the United States, Canada, and so on. But this word right here allow, okay, most of us in US, in Canada, in the UK to be able to trade the futures market because of that integrity. What you see is what you get. Understanding market makers and their market takers. Market makers provide liquidity by offering to buy and sell futures contract. I'm rushing through all this theory so that we can get to some practical aspects. They provide liquidity by offering to buy and sell futures contract. Market takers buy or sell futures contract at the prices offered by market makers. Let me quickly use this terminology to explain. Let's say this market maker A, okay. Oh no, I'm going to use Warren Buffett as an example. Sometimes they will invite Warren Buffett to CNBC. Warren Buffett has stocks with Coca-Cola. They will, at this particular time when it comes on board, the price the stock of Coca-Cola might be $10. Now, by the time they interview Warren Buffett, and he gives positive review, positive comment about what is going on with Coca-Cola, within that 10, 15 minutes, people will start buying Coca-Cola. Why? Because Warren Buffett is one of the market movers, either we like it or not. He's a market maker. So, and this man has, let's say, 10 million stocks of Coca-Cola. Within that 15 minutes, this stock can go from $10 to $20. Okay? His comment has just defined the price of this market. Now, when the price gets to $20, guess what he could do? He might sell half of his portfolio. What do you think will happen to the price? Response, guys. What do you think will happen to the rest to the market? The stocks of Coca-Cola. What do you think will happen? It will drop because a market maker just made a move. So the same thing they do in trading. So let's say today news now, NFP, one market maker might put in $1 billion. Okay? $1 billion to buy NASDAQ. Contract size of NASDAQ. So at that time, it will go up. When it gets up here, many market takers, they keep buying, they keep buying, they keep buying, they keep buying. It gets to this place. Then, before you know it, boom, they put in $10 billion worth of contracts size of NASDAQ. What will happen? Boom. But people that are still buying in this place will be saying, but the market is going up. No, the market makers, they just decided what happens to that trend, what happens to that market. And that is why when we get to account management, we get to risk management and all of that, you don't have billions of dollars. You don't have millions of dollars. As I've said, most of the accounts I have blown, not even most, all the accounts I have blown, either in Forex or in futures, is due to lack of stop losses. If you put a stop loss, you are saying that, okay, in case this market goes against me, this is what I'm willing to risk. This is what I'm willing to risk. But sometimes we always think, I say we because myself included, we always think that we know more than the market. We always think that we know more than these market makers. You have just $1,000. Somebody has $100 billion to trade with. A bank has this to trade with. So guess what? This person volume, because when we talk about markets, what determines the move of the market is demand and supply. I hope you know. Is demand and supply. Is demand and supply. It doesn't matter whether it's Forex or it is futures. Is the demand and supply. If there are, let's say, 1,000 buyers, okay, 1,000 buyers, put in one contract size, a mini contract size of NASDAQ, okay? There are 1,000. This 1,000, they put in one contract size of NASDAQ, they buy, okay? They are buyers. Then there's another market movers that just sold 1 million, okay, the same contract of NASDAQ. This person sell, this person buy. Where will be the direction of the market, guys? Response. Where will the market go? Will it go up or will it go down? Okay, it will sell, it will drop, it will drop, absolutely. So now you understand that it doesn't matter whether you are trading Forex or you are trading futures. You need to understand. So now, how do you play smart? You need to trade in the direction of these guys. And another word we call them is what? The institutions. So you need to trade in the direction of these guys. So you, based on your system, you need to know when the institution comes in. When do they come in? When they get out. Then you follow their direction. Okay, now let's continue because of our time. So the participants in the futures market, they are the hedgers, they are the speculators, they are the market makers, they are the arbitrageurs. This arbitrage, it's like when you are profiting from difference in price. I believe you understand that. The hedgers, so you and I, we belong to this group of speculators. These three, the hedge funders, the market makers, the arbitrageurs, these ones actually determines the move, where the market goes. Sometimes it's just like casino. They allow us to win some. If you don't know what you are doing, you still go to blow it all. Now, overview of trading platforms. So when you are trading, either you are trading your personal fund or you are trading with a prop firms, there are different platforms that you can use, okay? So trading platform are software applications that allow traders to execute trade. For you to understand what I mean by platform, if you are coming from Forex, you use MT4. We use MT5. You use, now all of them are changing to DX trade and so on and so forth. This is Forex. Okay, this is Forex. But in futures, you will be talking about platforms like Ninja Traders, Thinkorswim, and so on and so forth. So those are the platform. So the Ninja Traders and so on, Tradovate. So those are the platforms that, like, for instance, now if you come over here, if you go to Apex and you scroll up, you will see platform. So it's either you trading with, like right here is a Rhythmic or Tradovate. So two of them has different platform. Like if you are trading with, okay, I was just chatting with these guys. This is another platform. Okay, so this is another platform, as you can see, Quant Tower. There are just a lot. There are just a lot of them like that you need to. So, but you cannot, when you are just getting started, you cannot master all at the same time. You start with one, then once you master one, you can now grow it to another one, and so on and so forth. And of course, some of us use TradingView. When you go to TradingView, you scroll down, you will see platform. You can, if I log out here, so you will see different platform that you can use. Okay, so you see different platform that you can use, but you see right there, you see different platform that you can use. So I believe most of us will know TradingView. TradingView, you can use it to trade futures, you can use it to trade Forex, you can use it, it's a charting platform, and you can connect it with whatever broker that you are using for whatever you are doing. Now, the last time we talked about paper trading, this is paper trading here. Paper trading is like your demo, okay? It's like your demo account in Forex. So you call it, okay, this is a call it demo account, okay? So this is paper trading. So like right now, if you come over here, so based on, I'm not teaching strategy yet, so just don't ask questions. But now you can see, oh, okay, yeah, this market is going down. You see right here, I see one. This is one. You see, within a minute now, it's going back up. You can't just say because this is going down, you jump and you are selling. Like right now, this is not even a good time to trade anyway. The market is, as you can see, market is just going up and down, up and down. Today is Friday. The market is not really doing anything meaningful right now. But a small move from here to this place means a lot. Okay, for some of us that trade with prop firms, if you go full margin barber, like you use higher lot size, contract size, the market can move from between this place, between this place and this place. Just between this place alone, you can pass a challenge. You can pass a challenge. Okay, we're going to talk about that, how to pass strategies. There are different strategies. So anyway, let's continue. So you can see that's a platform, essential tools and features trader that you need. Charting tools, I've just talked about that. For technical analysis, you can trade. Use, okay, for instance, this is a platform now. This is another one here. You see Rhythmic. This is another one. This is a Quant Tower. So there are different ones. We will not go into that in order not to confuse us today. Now, how to choose the right platform? Consider factors such as ease of use, okay, available features, the fees, and customer support. Like these guys, as you can see, I was just chatting with them. Where are they? Okay, you see, and they were responding to me, the Quant Tower. I'm beginning to like them. You see, I was chatting with them. In fact, there was a time they connected remotely with my system to help me with my setup. Okay, so if I have to choose now between Quantower and TradingView, trust me, I will pick Quantower. But then, ease of use. When it comes to TradingView, there are millions of indicators. Okay, over here you have indicators. This with Quantower, they don't have as much as, so it depends. Quantower, you don't have to, you can use it for free. TradingView, you have to subscribe. I mean, there are free subscriptions also with TradingView, but you don't get a lot. So all those determines which platform you use, right? So, but if you are trading, if I should guide you getting started, I will say, okay, you can start with TradingView. If you want to do, let's say you want to trade with prop firms or trading your own personal account, you start with TradingView. You connect your TradingView with your broker. For instance, if you're using a Tradovate account, you cannot connect TradingView with Rhythmic for now. So that is why with Rhythmic, you have to use NinjaTrader. You use NinjaTrader with that. And I mean, like what I always say, once you are a soccer player, it doesn't matter which field they take you to, you should be able to play. So the same thing, it doesn't matter, oh, okay, either if you're a Forex trader now, either you are trading with what's it called? You are trading with what's this one? DX trade, or you are trading with whatever, you should still be able to what? Trade. So it doesn't matter where you are as a footballer, they take you to a field, you should be able to play. So the same thing a trader. It might take you, let's say, a few days to navigate your way, but you will figure it out eventually. And that is just one thing about learning. You have to keep learning. Okay. Now, setting up your trading account. I'm going to focus more on prop firms. Let's assume, okay, you are trading with prop firms. So once you sign up with Apex, I'm not recommending any broker yet. Okay, I'm just using Apex as an example. So once you sign up here, you are going to receive an email, okay, that, okay, your account has been set up. Some will do it immediately within few minutes. If you are using account like fast track trading, this one, you don't do evaluation. It's a direct funding. Disadvantage of it is very expensive. They do sales, okay? They do sales like this ones here. They say, okay, you can get 5. If you buy 5 for 6, they give you 6 accounts. Okay, 5 for 6. So, and that covers Rally, Daytona, and GT. It doesn't cover this. Then I think the CEO also got married last month. So they also have another sales going on, which they give discounts, 49% discount. So that also you can apply and buy any of these. I will, at the end of the training, I will share the link and the code if you are interested. So with this one, you don't go through evaluation. With Apex, you go through evaluation. Last time when Barnabas, Prince, BJ, and myself, the Shegun, when we were presenting, we told you guys about the differences. So one of them is like this one here. You see, there is end of day drawdown. Like today now, it was a losing day for me as a person. Because of what? This trailing drawdown in Apex. Apex, if you have an account and the maximum drawdown is 7,005, and you place a trade, and that trade gets to 7,000. But you didn't take this profit, and the market dropped against you, and you finally close it at, let's say, 500. You don't have a drawdown, maximum drawdown of 7.5 again. Instead, you now have maximum drawdown of $500. Why? Because this market goes to 7,000 out of the 7.5 that you have and draws back. That is the greatest disadvantage of Apex, and that's why most people don't like them, even though they are big. I mean, just this month, somebody got paid 1.9 million, which is not bad. I make that one, that would be a retirement for me to return to my village and go and tell the king that, okay, can I become the next king? Just kidding. Anyway, that is the end of the, trailing drawdown. Okay, trailing drawdown is bad. These ones and some others, they have what is called the end of day, just like what you are used to in Forex. So if I put in a trade, my maximum drawdown is 7.5. As long as I didn't get to this 7.5 drawdown, I'm still good. That account is still good. So those are the little differences that you need to consider before you sign up for any of these accounts. Okay, I think we are going to, next time we're going to meet, we are going to take an account, possibly maybe one of you that is willing to sign up, we sign up, we will take the steps. You see the steps from signing up to connecting your account, because trust me, special thanks to my buddy once again, BJ. He was my coach when it comes to features, because he dived into it before me. Small thing, I will call him, hey, okay, hey, bros, what's going on? You know, this and that. So up to now, we are still navigating, we are still figuring it out. Okay, so I'm going to be stopping here. We'll talk about fundamental, technical, and so on and so forth tomorrow morning. Then we'll dive into the system and how to trade. So 2 minutes, I'm going to take few questions. If you have any questions, go ahead and ask your questions. Once again, I'm going to be sharing this document also with us. I will post it in the our WhatsApp group. If you are not in the WhatsApp group, I will post it to my Telegram group. So with that, you can get access to the document. Then tomorrow we will recap what we do, what we do today. Then we'll dive more into the strategies and how to trade and so on and so forth. As I've said, if you have traded Forex before, this will be easy for you to transit. You just need to understand little this thing. Please, we will need the recording. Yes, I will send the recording as soon as we finish. Just give me about 1 to 2 hours for it to compile. I will send the link of the recording also. Any other question? Let me just say, you can mute yourself. I'm just going to take 1 or 2 questions. You can mute yourself if you have questions or you have any comments. Any question? Any question?
Good evening, sir. Sorry, it's evening here. Sorry.
It's okay. Good evening to you.
So, sir, just a quick one. I just wanted to ask you because on the last session we had,
Yes.
you spoke about paper trading. So I
Yes.
tried to connect the paper trading on my trading view. Yes. So is it that the paper trading, when we connect the futures, like these futures, we get data if we have been able to subscribe for the premium, right?
Yes. So you with paper trading, you need it. You see, like when you subscribe, Like I said, it's not like Forex that you just download demo account and boom, boom. But like when you go to, let me share my screen. If I go to watch list now, and I say, okay, I want to add, you see futures market, you see the group that has given you the data right here.
Yeah.
You see, so like NASDAQ now, this is NASDAQ. Right now, most of us, we are trading this. So this is the CME that's, you know, so right now, I believe after this September contract now, most of us will be transiting now to December contract. This contract now is going to be expiring anywhere from now. So the paper trading, yes, you still have to like upgrade your account. Then from there, that gives you access to all of that.
Okay. All right. Thank you, sir.
You're welcome. One more question, one more answer. It's a BJ actually right here. Let me see. Right there. Okay. 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 So guys, it's 2 minutes past 12. Once again, I want to thank you for your time. Tomorrow morning by 9 a.m. 9 a.m. the same link. I will post it again. I will remind us 9 a.m. my time. Will be 10 a.m. in New York and Canada, and will be, what's the time difference now? Nigeria and US. That will be like, Francis, what will be the time over there? 9 a.m. I will post it anyway, like 1 hour to the time, 30 minutes to the time, just to remind you, then do the conversion by yourself. Okay? Thank you so much, guys, and enjoy the rest of your weekend.
Thank you, Apostle.
You're welcome, sir.